Wednesday. Who's here? Amira, James, Leon. Hope you guys are well. Big day. I don't know, Amira, if you know this. Hey, Dale. Scotland. James, you'll know this as you live in Scotland, but a World Cup qualifier, Scotland against Ukraine tonight, 10:45 in Dubai. So a World Cup qualifier. We've not been to the World Cup since 1998. I wish it wasn't against Ukraine, but it is against Ukraine, and we'll certainly be hoping we win. So I might be a little bit upset tomorrow if we don't win, but certainly a massive game. Certainly a massive game. I'm nervous already. Morning, Silver. Morning, Aaron, mate. Good to see you. So yeah, it's on tonight. I'll be watching that with my Scotland top on, and hopefully we get past Ukraine, and then we'll play Wales in the next round if we get there. And I shall be looking at tickets if we do get to the World Cup. First time in my kind of adult life. So, morning, Griff. Morning, mate. Let me go through this. You sent me first, Silver, because I think this is really nice. This is a nice setup. Here, got in there, cup with handle, within a cup with handle. I don't know if you took that break, but you could absolutely have taken that break. I like that. Yeah, right off the bat, I like that. Daily, yeah, I like that as well. Absolutely. Nice trade. Did you take the break out there? Silver. Respecting that area. Nice break. Break coming on, kind of increasing volume there as well. Yeah, you could absolutely have taken that break. Nice chart. You're using breakout retest. Okay, so you're waiting the 4-hour breakout. Yeah. I don't have that on StockNet actually. I have it on my FTMO. I'm gonna look at that actually. I don't think I have it here. Gold, no. No, but that's really nice. Not so good for the breakout. Yeah, I like that, mate. Absolutely. Like that. I like it. Okay, markets today. Let's get into it. SPX 500. We had a decent 4-hour bar here. Not quite tagged the area. Right, so notice how this is our previous resistance. So we're coming back. We've kind of had a decent bar, decent 4-hour on the 20, but it doesn't look like we're getting follow through. So what maybe we're looking for is for this to come down and properly retest this area, i.e. giving us our ABC. So it looks to be, at the moment, that's what is possibly happening, depending on how London opens. So maybe my bias here would be ABC, but we could be, if we look at smaller time frames, are we getting a slight wedge? We're getting a slight wedge there? Not really, no. I thought maybe from a 4-hour perspective, we were getting into this kind of very slight wedge, which theory dictates movement to the upside. But yeah, I think possibly because of that loss of momentum, maybe we come down and properly retest this area, which would actually make this quite a bit healthier for continuation to the upside. Daily doesn't look too bad. Yes, we can fall off. Absolutely. We know that it's still against the grain. I just think my personal bias is we still have, as long as we get that catalyst, if it does do this, right, as long as we get something like this on increasing volume, doesn't have to be increasing volume, but something that tells us that this corrective is over and we continue to push up probably to this level here. So I still like the a little bit more risk on sentiment. We're just looking for that market to go, and it may just take another day or two within that corrective phase before it does. So SPX is maybe a little bit more corrective, possibly waiting till Friday for those NFP numbers. So if we consider this Wednesday, from a 4-hour perspective, getting down there by Friday would probably make sense. And then the market will maybe decide that if the numbers come in good, we move up. If the numbers don't come in good, maybe we move to the downside. But let's see. The dollar. So the dollar, it's not giving me massive confidence in saying corrective over, push to the upside. Okay, it's not done that. If I zoom in on that, obviously this is not a major reason here, but we are possibly getting the bend, at the end of the trend or at the end of the corrective. If we get another bullish day today, again, there is NFP on Friday, but from a technical perspective, a bit of volume coming in today on a bullish day, we could be getting that volume that I kind of use for possibly signaling the end of the corrective for continuation to the upside. So from a 4-hour perspective, right, we have broken through our anchor technically. I'd like to see a break above this wick, right? I always like to see a break above wicks. This is obviously a bearish sign. If we can push through it, there's still a little bit to go. There is certainly barriers there for dollar to move to the upside. Yeah, I'm kind of still on the fence, really. You know, I like the fact that we've got a green day here, but is this enough to signify we push to the upside? I don't think it is yet. So although we're here, again, we need some real bullish momentum. From a smaller time frame perspective, you know, we could be looking at, not really. So, it's a hard one to predict, I have to say. What are your guys' thoughts on the dollar? Can you see dollar bullishness again with NFP Friday? What are you thinking? You guys are as good an opinion as I. Are you thinking dollar up or dollar down? Or potentially ranging till Friday and then make the decision? I mean, that could obviously be the case for NFP. I do think NFP is quite big this month. I'll let you guys type. Break a trend line, yeah. Break out this structure, right? So there's obviously another bullish scenario. It's not a very good line, but retesting that. Did it retest? Let me put a proper line on here. If you're taking this as a channel. So breaking out from there, not really a retest, but pushing on. There's, yep. You got your 50% area. You could be looking at this as well. Potentially this. NFP, stay away from the dollar. 20 support, 20 curling up. There is a bit more bullish, a bit more of a bullish case than a bearish case. But again, I think we just need to see that real momentum, which we probably won't get until Friday. So yeah, NFP, stay away from the dollar on Friday. Is not a bad plan. I don't normally trade NFP. But if I had to give my bias, it would probably be up. Probably be up. Okay, trades, pound CAD, we are still in. Ironically, since I've said I'm not trading the CAD and I did trade the CAD, it's actually been one of my best performing pairs this year. So I like where we are. There is some news out today, by the way. The Bank of Canada interest rate decision, I believe, later on today. Some PMIs as well out of the pound. If I had to give a bias on that, again, from a fundamental side, you know, I'm not massive on it. I would probably be expecting negativity for the pound and potential positivity for the CAD. In terms of currency strength, they are expecting a hike up to 1.5. But from a technical perspective, I'm just waiting for a swing now. You know, so we've created a low. I could look at an anchor, but I'd rather, with what's coming up today, I'd rather just leave my stop here. You know, the swing is technically not created until we break below these lows. We have multiple anchors here. Again, trade management is a very personal thing. I would just rather give it a little bit of room today to hopefully come back down and break underneath here where we can move our stop to that latest anchor or that latest swing and then just give it room to move. You know, nothing has massively changed from a 4-hour perspective. We're still within this corrective phase. Kind of looks relatively healthy, right? We're getting this 20 period coming down, which should provide another area of dynamic resistance. We've got our resistance zone here in the form of that level. And maybe we're just, again, pullback, price acceptance underneath here before we maybe come down to the lows. Again, the worry of this, or the worry with this trade, is that weekly extension. Are we going to come into potential B wave down here for a larger corrective before we maybe continue in that trend? So I'm happy with where the stop is. I'm happy to let that run. I am still favoring CAD over the pound, and yeah, let's see how it goes. Let's see how it goes. Pound CAD, Euro Yen. Euro Yen is another one where it's kind of in a nice position. I like this better than Pound CAD, to be completely honest with you. Our stop is locked to break even because we did break above the highs. And again, always thinking about the longer time frame where the analysis was, we're having that impulse loss of momentum, harder reset. We're looking for this again, right? Because of what's happened here, there's no reason why we can't get a decent move to the upside. The yen has obviously been weak on account of a bit more risk on nature. If the market likes what's coming out on Friday, then the yen could weaken off as well. Let's see. It's a nice position to be in. Basically, it's a nice position to be in. And always with my trades, I'm looking for these big winners. They don't come around often, but there's no reason why. And again, they could come down and stop me out. Pound CAD could push up and stop me out. But there's no reason why at this point in time, one of these can't be our big winner. So Euro Yen, I like it to the upside. Let's see where it goes. Just sitting on my bum. Okay, watch this today. Aussie CAD is still there. I put Euro NZD on the breakout retest. I shouldn't have done that. That was a little mistake by me. So Aussie CAD looking at still at this daily. I know there's an evening star here, a little bit of volume coming in. For me, in terms of aggressive entry, not quite ready yet. There's something in my gut telling me this is not quite enough. You know, I don't like the fact we've had this push and then a kind of price action like this. So in terms of aggressive entry, not quite ready to do it yet. I would prefer something like this, looking at aggressive entry up here. But still looking at Aussie CAD potential shorts. Long way to go on this. Daily perspective to the downside. What I can look for is a breakout here. So if I move this here, right, what I can look for is our ABC from this latest push to the downside. Looking for a break of B, V reversal in here, corrective, push on, break down, retest, continuation down. Right, I like that idea rather than the aggressive daily. Right, that's not saying that this can't go to the downside, because if we take our latest impulse, absolutely this is, you know, enough of a corrective to move down. I'm just taking it from my eyes. Remember, everybody's eyes are different. Everybody looks at it a different way. And this kind of structure, I need a little bit more in our handle, or our secondary structure is probably the more professional way to say it, to take that aggressive short. But I do like this. Obviously, I like a break of B. We are underneath these moving averages now. Hourly looks good. The trend is down. 4 hours kind of rejecting around that 200. You know, it's not really a potential setup just yet, but there is potential here for head and shoulders short in terms of a breakout as well. I like the idea of Aussie CAD shorts. So I'm looking at that for a breakout. And a breakout retest. Euro Kiwi. Euro Kiwi is still here. It's not going to be on for an aggressive. And I think it's just hanging on by a thread on my watch list, to be honest with you, with what happened the last 4 hours. I really need some bearish pressure today to get down there and make this look a little bit better. If it does push the upside, fine, I take it off and I move on. So looking for some bearish pressure, not something that is quite ready just yet on Euro Kiwi. And finally, the last one today is Euro Aussie. So Euro Aussie, obviously I was long on this on aggressive and took this out, which was good for my mindset because I needed that little refresh, but it was the technically the wrong thing to do, but the right thing to do. So, you know, last Friday I wanted to kind of get everything out. Sometimes, you know, I always say stick to your rules. That's true. But sometimes if you're hurting in the market, it's okay just to take it out, refresh, and come back on a Monday. And sometimes I do that. So, what was I saying? So looking at this, Euro Aussie from a decent downtrend, potentially coming into this corrective. It could be now ABC 1, 2, looking for a break of 1 down here. Right, 4 hour perspective. I need more in here. Right, I need more in here. Left shoulder, head, potentially right shoulder. I need this to come up a little bit, give us a reload from this latest impulse. The break should be underneath that 200, underneath that 20. If it does decide to break before, I still need a little bit more before I can take the breakout retest. Just need a little bit more in terms of our 30 to 50% digestion from this latest move to the downside. So EA, now looking at this chart now, there is obviously the case here in why I kind of went long on it. I did make money on it, but it's irrelevant. But now looking at it from how price action has developed, right from here, certainly a case for moving to the downside. And certainly, if the stock starts to continue that latest push, should help the Aussie. So probably no trades for today. I'm still happy where I am. And hoping for a Scotland win. Right, anything you guys want me to look at before I go? Oh, I was going to show you this, sorry. And remember tomorrow, the $200, no, it's not tomorrow, sorry, Friday, $200 giveaway for one member. I was going to show you my trade management stuff that I put in yesterday. Let me just get that up. 1 second. Okay, here we go. So I went through all my trades from October, I think October of last year, plus the ones this year. Obviously, Euro Yen is still in progress. So Euro Yen, by the way, that's why I've got the red line here. So on this 30-minute, this was my stop. Okay, so this is what I put in for my aggressive. Obviously, our normal stop was down here, or it's a bad line. It was actually roughly around, roughly there, right? So we got about an extra 30-40% taken off our risk reward, and using that for my aggressive entry in Euro Yen. So obviously, I cannot put that in because the trade is not finished yet. Okay, but it looks like it will be quite a nice one. So I've added all these trades, obviously some losers in there as well, that's fine. But this is what's good about it, right? So I've always kind of maintained that I don't want people just to copy what I do, right? If you like the strategy, if you like elements of the strategy, use it, that's fine. If you like exactly my strategy, perfect. But trade management is always something that will be, certainly if you've got roughly a strategy like mine, I know Griffey, you probably slightly different, maybe, with SMC. I don't know, let me know if I'm wrong on that. But everybody will have a different view on trade management, right? Some people might say, so if you like the trades I take, let's say that's fine, the strategy, but you don't like how I do it, or you don't like how I'm potentially going to change it. You like maybe taking full swings with no partials, right? Because right now, this has got the best return on your investment, but obviously the lowest win rate, where we're getting a high payoff ratio. If you're happy doing that, right, and you're happy with having a lower win rate, with potentially getting one big trade or a few big trades a year that make a lot of money, then you can implement this kind of thing. Maybe you like the idea of taking money off at 1-to-1 or 1 point. It seems like 1.5 to 1 seems to be a better kind of scenario there. And the good thing is I'm doing the work for you. So, you'll have a full range of options for your kind of trade management, where you can say, well, do you know what? I kind of like this idea. If you like my trades, again, trade management is a very personal thing. So I'm still gearing towards this. I still like the idea of this 50%, 30-minute latest anchor, taking 50% at 2R and 50% swing. It's the second, at the moment, the second best performing strategy. It allows me to take partials, which helps my mindset. It has a slightly better win rate than this one. But my mindset is this is something that I kind of originally like. And it's certainly giving the data that says it's more profitable than what I'm currently doing now. Albeit with a slightly, not massively, again, I need more data, a slightly lower win rate. So I think the only trade where I had a difference was this Euro Swiss. So Euro Swiss on my original made 3.2, but in this one I lost it because it just clipped me out. Basically, my stop was tight, so it just clipped me out before moving in that direction. But that was the only one so far that has made money here and not made money here. But even if we go through swings and roundabouts, right? What's the other one? Oh, okay, and Kiwi Swiss as well. But like EURUSD 1% to 2, 1% to 2, obviously 6 to 14, 2 to 4. So obviously the winners are big. But want to get a few more trades for this. Just something good to see, I think. And again, going with the general premise of most trading strategies, the lower the win rate, the higher the payoff. The higher the win rate, the lower the payoff. Simple kind of formula, as long as you've got that edge. Ryan, have you tried ATR? No, I've not tried ATR silver. It's not something I would do. It's not something I would do. I'm very much a kind of swing anchor person, as you are well aware of. So it's not something I would even test either. Not that I don't think it's a bad idea. I'm not saying that at all. It's just using an ATR, does it resonate with me? Probably not, you know. And I'm quite happy. I'm quite happy using that 30-minute anchor, and it seems to work. You know, it seems to work. And this one was and this is where I still need to learn, right? Because if we take the breakout, we took the breakout here, right? I was umming and ahhing in real time of where do I put my stop, right? Because it swings or anchors, right? Obviously, the difference between a swing and an anchor, I presume you guys know. Anchor is obviously one bar, and then a swing is a proper swing before you break to the upside. Okay, so technically, this I consider this our latest swing, you know, but I could have considered it here as well, you know, in terms of an anchor. There's certainly an anchor in there, but I thought, is that a proper swing moving into the area? No, I thought this was probably a more prominent swing. That's why I was happy to put it there. So there's still some things I will have to learn as I move on about where specifically the stop is placed. But again, that's what we test for, right? That's what we test for. So that, I think, in terms of your 2R, I would have hit TP1, right? Yeah, I would have hit TP1. I think this is 54 pips. Euro yen. 54, and it's running about 186. So what's that? 50. It's running about 3 point something R. I would have taken half off and made 2% on this particular trade, and now I'd just be, you know, at break even. So the minimum for this one at the moment, if everything goes tits up, excuse my language, would be 2%. Right now, my original would be 1%. So let's see. It's all looking good, but I need more data. Yeah, it's using a lot of things, right? It's using a few strategies, stop loss placement. Yeah, I know. It's not something I would use. You know, just not something I would use. That's simply it. I kind of use what I think I'm good at, and that's it. But you can test it. You can try it. Nothing wrong with that. Nothing wrong with that. Right. Any questions? Any questions before I head off? Anything you want me to look at? Amir, I won't speak to you tomorrow if you win. ATR, it's average true range. It's an indicator. So it's used a lot in pullback strategies. So I'll get it up here actually. Let me get it up. True range. You don't have to be sorry at all. Don't have to be sorry. Here we go. So average true range. Here's your technical definition. It's a technical analysis indicator. Blah 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 blah. Measures market volatility, decomposing the entire range of an asset price for that period. The true range indicator is taken as the greatest of the following: current high less the current low, the absolute value of the current high less the previous close, and the absolute value of the current low less the previous close. Does that make sense? It's basically the range, you know, the average range of a set of candles. Does that make sense? So basically, right, if you have got a 14-day ATR, right? Let's say you got a 14 ATR, and you've got 14 candles. Okay, this is your 14 candles. whatever it is, whatever pip amount this, let's say this is 10, this is 14, this is 8, this is 2, this is 5, this is 7, blah, 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 right? It just takes the range of those last 14 candles, right? And that's where you would put your stop loss. Right? That's correct, right? That's correct. Silver? Am I right on that? I haven't used it for a while, but I presume that's what it is, right? I haven't forgot, have I? Yeah, correct, yeah. Does that make sense, Amira? So it's just taking the average of your kind of range of all these, whatever period. So if you did an 8 ATR, it would be the last 8 candles. And yeah. See if I can add it in here. Let me see if I can add it in. Okay, so you've got your line here, right? It's shown as a line. But then where do you get your value? Hold on, I'm confusing myself here. So the value right now is 15, right? 15, 16. So that means you would have, if you went long here, using a 14 ATR for your stop, you'd have a 16 pip stop, is that right? Oh yeah, okay, there it is, 16.41. So is that, am I saying, I'm saying that right? That can't be right. 16. 14. Or I think people use a 2 times ATR, right? I remember in FX propulsion, they'd use a 2 times ATR stop, which would, I think, coincide with around, if you're doing FX, which is a 50% pullback. So I'm sure with the FX propulsion, so your pullback, let's say they went to 50, right? I think they would use a 2 times ATR stop, or a 0% stop, or a 2 times ATR stop. So in this case, it would be 16 pips, and they would use a 32. 1 times under the candle or structure. Okay, I get what you're saying. Okay. I guess there's various ways to use it, right? Better at higher time frames. So if, okay, so I'm just trying to remember this now. So we're up here. So you would do, let's say you bought this candle where it is, you would do 16 pips underneath that, right? I guess there's various methods. Yeah, as you wish. Yeah, I guess so. I think a 2 times ATR, now that I'm kind of remembering, I'm going back, 2 times ATR, I'm sure that's quite popular. So which would be a 32 pip stop. You got breakout retest and ATR under the hammer. Okay, yeah, okay. So if we had a breakout retest, right? Let's say we had this. For example, let's say EJ was this. So EJ is 16 pips. So you'd go 16 pips here and put your stop loss underneath there. So 1 times ATR. The other way for 2 times ATR would be you buy the candle, then your stop loss is times 2 ATR, whatever that is. Yeah, yeah. It makes sense, right? Makes sense. Last 14. Better on higher time frames. Yeah, I guess so. I think most are, right? Higher time frames always better. Anyway, I guess hopefully you understand now, Amir. It's good though. That's actually good, because sometimes things that I forget, after years before learning it, and then you think, well, what is that again? What is that again? It's just things that go out your mind, right? Anyway, good. Okay, I'll be off. Thanks for joining, everyone. I appreciate it, and I'll see you all in the morning. No, I won't see you in the morning. Sorry, I'm doing a US stream tomorrow, so I'll be on at 5 o'clock. And then Friday, obviously, the NFP giveaway stream in the morning as well. So cheers, guys. Have a good day, and remember, trade safe. Peace.